Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host, and today we're exploring a strategy called Expectile Band Reclaim. This is a trend pullback approach built on a lesser-known statistic called the expectile, which creates asymmetric price bands around the market. Over the next several minutes, you'll learn how these bands are calculated, how the strategy defines trend direction, and exactly how it looks for a dip that reclaims a band before joining the move. Remember, this is educational content only. Let's dive in. So what exactly does the Expectile Band Reclaim Expert Advisor do? At its heart, this strategy is a trend-following pullback system. It waits for the market to establish a direction, then looks to join that direction after a brief pause or dip against the trend. What makes it distinctive is the tool it uses to measure the market, the expectile. An expectile is closely related to the mean, in the same way that a quantile or percentile is related to the median. The strategy calculates three expectile levels over a rolling window of closing prices: the upper band, the lower band, and a middle line that sits at the average. Unlike a standard symmetric band such as a Bollinger Band, expectile bands treat the two sides of price differently. In a genuine uptrend, where the larger moves happen to the upside, the upper band floats well above price while the lower band hugs it closely. That asymmetry is the whole idea. It means a dip that pierces the lower band is, by design, a shallow pullback rather than a full breakdown. The middle line does double duty. Its slope defines the trend. When the midline is rising, the strategy considers the market to be in an uptrend and only looks for long setups. When it's falling, it looks only for short setups. This expert advisor runs on a single time frame, whichever chart you attach it to, and it can be applied to any symbol, from major currency pairs to metals or indices. It's designed for traders who prefer a systematic, rules-based approach and who are comfortable letting a defined process manage entries and exits. As always, this walkthrough is for educational purposes only, and trading always carries the risk of loss. Let's walk through the exact logic step by step. The expert advisor acts once per completed bar, so it makes decisions on closed candles rather than reacting to every tick. On each new bar, it first gathers enough history to do its calculations. The first job is to build the expectile envelope. The strategy takes a window of closing prices, by default 40 closes, ending on the bar just before the signal candle. Over that window, it computes three values: the lower expectile using the tau parameter, which defaults to 0.15, the upper expectile using 1 minus tau, and the midline at the 0.5 expectile, which is simply the window mean. Measuring the bands on the window that ends before the signal bar is deliberate. It means the signal candle interacts with a band it did not itself help create. Next, the strategy measures trend. It takes that same window, shifts it back by the slope look-back, 10 bars by default, and computes the midline for that earlier window. If the current midline is above the earlier one, the trend is up. If it's below, the trend is down. Now the entry conditions. For a long, three things must line up. The trend must be up, the just closed candle must have a bullish body, meaning it closed above its open, and that candle's low must have pierced the lower expectile band while its close finished back above it. That combination describes a shallow dip into the band that was immediately reclaimed. The short side is the exact mirror. The trend must be down, the candle must have a bearish body, and its high must have pierced the upper band while the close finished back below it. Once a valid setup appears, risk is handled with the average true range. The stop loss is placed at the entry price minus the ATR stop multiple, 1.8 times ATR, for a long, and above the entry for a short. The take profit sits at the ATR target multiple, 3 times ATR, in the direction of the trade. That gives a reward-to-risk ratio of roughly 3 to 1.8. The expert advisor also holds only one position per magic number at a time, so it won't stack trades on the same signal. Let's look at the actual MetaTrader 5 code on screen. At the top, we have the input parameters, the settings you can adjust in the strategy tester. Windows sets how many closes the expectile envelope spans, 40 by default. Tau is the lower expectile level, 0.15, and the upper band uses 1 minus that. Slope lookback controls how far back we reach to measure the midline slope. Then we have the ATR period, the stop multiple, the target multiple, and the lot size. Below the inputs, you can see the three expectile values being calculated: the lower band, the midline, and the upper band. The trend flags, trend up and trend down, simply compare the current midline against the earlier one. Now the long block. The long setup is true when the trend is up, the candle has a bullish body, its low is at or below the lower expectile, and its close is back above it. When that's true, the entry is taken at the ask, the stop is placed at the ask minus the stop multiple times ATR, the target at the ask plus the target multiple times ATR, and trade.by sends the order. The short block is the mirror image. It's true when the trend is down. The candle has a bearish body. Its high is at or above the upper expectile, and its close is back below it. The entry is the bid, the stop sits above it, the target below it, and trade.sell sends the order. Clean, symmetric, and fully rules-based. Let's bring this to life on the chart. On screen, you can see a candlestick sequence with three lines drawn over it: the upper expectile band and the lower expectile band in blue, and the midline, our trend gauge, in gold. Watch how the bands behave. Because expectiles are asymmetric, in the rising market on the left, the upper band floats above the candles while the lower band tucks in close underneath them. Look at the first few candles. Price is stepping higher, and the midline is sloping upward. That upward slope tells the strategy the market is in an uptrend, so it's only interested in long setups here. Now watch the fourth candle. Price pulls back and its low dips below the lower expectile band, briefly poking underneath it. But by the time the candle closes, it has pushed back up and finished above the band, and it closes above its open, giving it a bullish body. That is exactly the reclaim the strategy is waiting for, a shallow dip into the band that was immediately recovered. You can see the buy entry marker appear on that candle. With the long in place, the stop loss sits below the entry at 1.8 times the average true range, and the take profit is set 3 times ATR above. Now follow what happens next. The next candles resume the climb, one after another, each closing higher. Price rides the trend upward until it reaches the take profit marker several candles later. The trade is closed at the target, and you can see how the reward, 3 units, was set against a smaller risk of 1.8 units. Now the market changes character. Watch the midline. After the peak, it rolls over and begins to slope downward. That downward slope flips the strategy's bias. It's now looking only for short setups, and by symmetry the bands have flipped their behavior too. The lower band now drifts away below price, while the upper band hugs the candles from above. Watch the candle where the sell marker appears. Price rallies up into the upper expectile band, and the candle's high pierces above it, poking through the band. But the candle can't hold there. It closes back below the band, and it closes below its open, giving it a bearish body. That is the mirror image of our long setup, a shallow rally into the band that was rejected. The sell entry marker prints on that candle. For the short, the stop loss is placed above the entry at 1.8 times ATR, and the take profit sits 3 times ATR below. From there, price rolls over and works its way down, candle after candle, each one closing lower than the last. Eventually, price reaches the take profit marker near the bottom of the sequence, and the short is closed at its target. Notice what tied both trades together. In each case, the strategy waited for the midline to define a clear direction, then waited for price to briefly stretch into the band on the opposite side and snap back. It never chased the move. It joined it on a pullback, with the stop and target defined in advance by the average true range. That disciplined, repeatable structure is the core of the Expectile Band Reclaim approach. And that brings us to the end of our breakdown of the Expectile Band Reclaim Expert Advisor. We covered what an expectile is and why its asymmetric bands set this strategy apart, how the slope of the midline defines the trend, and how the strategy looks for a shallow pullback that pierces a band and then reclaims it before joining the move. We also walked through the MQL5 code and a full example of both a long and a short trade. Remember, everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which strategy to break down next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.